Are you constantly worried that you're not making enough money and stressing over your financial future? By the end of this video, you will know exactly what you need to be investing to stay ahead of the curve. Worried you might be falling behind in the race to a comfortable retirement or financial freedom? Well, buckle up, because today we're diving into the must-know basics of dividend investing. We will reveal the secrets to creating passive income for your daily living and retirement. And don't miss the last two age groups, as they are the most important for dividend investing and earning a steady income without lifting a finger. Now, I want to share a bit of my own dividend investing journey with you. Now, in my early 40s, and of course this was after that nasty, crazy ride of a bankruptcy, I was working a demanding job in the crazy retail pharmacy environment. If you don't know much about that, then look it up. Pharmacy world is stressful, especially in retail. But anyway, I was trying to balance career and family life, and I knew I needed a way to secure my financial future without sacrificing precious time with my loved ones, and especially since I was late after going through bankruptcy and not understanding anything about financial literacy. But it was around this time that I met a mentor. Of course, while I was diving into financial literature and trying to learn as much as I could, I did come across this wonderful mentor who introduced me to the world of dividend investing. Now, he had been investing in dividends for decades and had built a substantial passive income stream. And I won't even mention how much he was making per month. Probably wouldn't even believe me, but it was absolutely incredible. His guidance was invaluable as I started to build my own dividend portfolio. I began by diversifying my investments, including broad U.S. market ETFs, international equity ETFs, and individual stocks. The journey wasn't always smooth, but I just stayed committed to my strategy. Now, there's one crucial element my mentor shared that made all of the difference. Stay tuned, and I'll share that at the end of the video. First, let's talk about what dividends are. When a company makes a profit, it can reinvest it, save it, or distribute it to shareholders as dividends. And think of dividends as interest from a savings account, but potentially much more rewarding. And dividends can be paid in cash or additional shares of stock, and typically they are paid out quarterly. Now, not all companies pay dividends. Most often, dividends are associated with larger, established companies that have a history of stable earnings, such as Apple, Microsoft, and ExxonMobil. On the other hand, some companies choose to reinvest their profits to fuel growth rather than paying dividends. The simplest way to think of dividends is as a bonus or reward you receive for owning a stock. Dividends are set as a percentage of the company's profits, so you're paid a dividend for each share of stock you own. For example, if a stock is priced at $100 and pays an annual dividend of $5, the yield is 5%. And one of the key metrics to understand is the dividend yield, which is calculated by dividing the annual dividend per share by the stock's price. This percentage indicates your annual return on investment from dividends. And additionally, focus on dividend aristocrats, stocks that have increased their payout for 25 plus consecutive years. These companies offer a reliable income stream and are ideal for building a dividend-focused portfolio. Now, let's get started and see what it takes if you are in your 20s and ready to create an amazing future. But actually, before we get started, if you're new to the channel, smash that fucking subscribe button. In your 20s, it's all about building a strong foundation. Start by saving and investing consistently, even if the amounts are small. Focus on companies with a history of stable and growing dividends. Use stock screeners to find reliable dividend-paying stocks. Compounding over time will significantly boost your returns. For example, investing $5,000 annually and reinvesting the dividends can grow your portfolio substantially by the time you reach your 30s. Now, you might be thinking, my 20s are great, but what about my 30s? What's next on this financial roller coaster? Well, hold on to your hats, because things are about to get even more interesting. In your 30s, it's time to grow your portfolio. Continue to focus on diversification. About 77% of S&P 500 companies pay dividends, so balance your portfolio with a mix of high yield and high growth dividend stocks. Let's break down how much you need to invest by age 30. Assuming an average annual dividend yield of 3%, aim to save and invest around $200,000 by age 45. This provides a solid base to build upon. So you've successfully built your portfolio in your 30s and might be thinking, well, I've mastered the basics of dividend investing. But hold on, because your 40s are where the real financial magic starts to happen. Ready to maximize your dividend income during your peak earning years? Well, heck yeah, let's dive in. By your 40s, your focus should be on increasing your investments and seeking stability. With a portfolio of $200,000, reinvest dividends to grow it further. You should aim for a portfolio of about $1 million by age 65. At a 3% yield, this would provide $30,000 a year in dividends. Investing in dividend aristocrats, companies with a history of increasing dividends for 25 years or more, can provide stability and consistent growth. These companies offer a reliable income stream, essential for planning your financial future. Let's say you're cruising through your 40s, but don't get too comfortable. The 50s are knocking on your door and they're bringing some serious financial challenges. Ready to tackle them head on? Well, let's frickin' go. In your 50s, it's crucial to prepare for retirement. Reinvesting dividends is key. For instance, if you invested in an S&P 500 index fund in 2000 and reinvested dividends, your returns would be significantly higher than relying on stock price gains alone. At this stage, ensure your portfolio is well diversified to manage risks. Focus on high-quality dividend stocks and ETFs to ensure steady income as you approach retirement. You're almost there. The finish line is in sight. Your 60s are the time to shine and reap the rewards of all your hard work. Ready to wrap this up and sail smoothly into retirement? Let's finish freaking strong, baby. In your 60s, it's time to start living off your dividends. A well-planned dividend portfolio can provide a reliable income stream, supplementing other retirement income sources. For instance, with a $1 million portfolio yielding 3%, you could earn $30,000 annually in dividends. However, it's important to understand that dividends are not guaranteed. Companies can reduce or eliminate them based on their financial performance. Diversification is key to managing this risk. You've made it through the decades, but don't go anywhere just yet. Let's tie it all together with some final tips to ensure you're set for a financially fabulous future. That crucial element my mentor beat into my brain is what I have already mentioned throughout this video, and it's the power of dividend reinvestment and compounding returns. Reinvesting your dividends allows you to buy more shares, which in turn earn more dividends, creating a snowball effect that significantly boosts your portfolio's growth over time. To give you a real-life example, I currently receive between $4,000 to $7,000 a month in dividends from a diversified portfolio. This includes broad U.S. market ETFs, international equity ETFs, and individual stocks. Diversifying across different sectors and geographies helps ensure steady income. I know that's not a huge amount, but hey, I started late. So just imagine if you were to get this rocking and rolling, say in your 20s or your 30s, it would be huge. To wrap up, here are some actionable steps you can take. Start today. Open a brokerage account if you don't have one already. Research dividend stocks. Use stock screeners to identify reliable dividend-paying stocks. Diversify your portfolio. Don't put all your eggs in one basket. Include a mix of high yield and growth stocks. And last, reinvest your dividends. Set up automatic reinvestment to maximize your returns. And that's it, my friend. Thank you for watching, and let us know in the comments how you're planning for your retirement and if you have any tips to share. See you in the next video.